Sanibona bafethu uphila. Let us look at this pair of which is going to be British pound versus the US dollar. Always remember, do not make that mistake of just starting analyzing on smaller time frame. Always start from a higher time frame. The main reason for you to start from a higher time frame is to get the overall trend. Once you get the overall trend, you'll be happy because of you will take trades that are corresponding with the direction of the market. So whatever you do, make sure that you look for opportunities that are corresponding with the direction of the market. Do not make that mistake to take trades that are opposing the direction of the market. Do not make that mistake. Flip. Just 1 minute.
All right, guys, as I was saying here, that whatever you do, make sure that you start from a higher time frame. Don't just go to smaller time frame and look for opportunities without starting from a higher time frame. Higher time frame is very much important, guys. Now, sharp. So here we are on a 12 months chart. We are on 12 months chart. If we are on 12 months chart, it means you're gonna see one candlestick for the whole year. This candlestick is for 2025. Next year, you're gonna see another candlestick, but we don't know how long this candlestick will go up. But just know that if you're on 12 months, you're gonna just see one candlestick. 6 months, you're gonna see one candlestick every after 6 months. 3 months, every after 3 months, you'll see a new candlestick. 1 month, every month, you'll see a new candlestick up until you reach 1 hour chart. Let me just say each and every time frame that you see will represent um, a candlestick. If I'm on daily time frame, it means you every day you'll see a new candlestick if you're on daily chart. If you're on 4 hour chart, every after 4 hours, a new candlestick. 3 hours, every after 3 hours, a new candlestick. 2 hours, every after 2 hours, you'll see a new candlestick. 1 hour, every hour, it's a new candlestick. But let us not go deeper on that. So now let us look at the GBP versus the US dollar. You know what we do in the beginning, right? We identify the major support and resistance. The reason for you to identify the major support and resistance is to understand where the market is coming from, where the market is headed. Once you understand these two, you might not find yourself taking trades that will be oppositing the direction of the market. For an example here, if you look at what happened here, you can see that you have your breaker structure here. The market went down, came back to the breaker structure. Again, you had your breaker structure here. The market came back to the breaker structure. That means we don't have much here on this particular time frame that can cause the market not to continue to the upside. Né? And again, if you identify things like this, everything becomes simple. Whatever that you're gonna identify inside the major support and resistance, it's going to be your minor support and resistance. So let's remove the minor support and resistance. This minor support will continue to work as the market is going up. Né? So now we move to 6 months chart. We are on 6 months chart now. On 6 months chart, what is it we see? We still see our major support and resistance, and then I just noticed a trend line here. I just spotted a trend line. Our trend line is very, very much important. We're gonna let's lock this one. We don't know when the market will be on that trend line, but the market will respect that trend line. That's your first time touch. That's your second time touch. Imagine if you are trading on this particular time frame of which is 6 months. That means you have to wait for years for the market to come back to this trend line. And as soon as the market comes back to this trend line, the market will respect the trend line, the market will go down. I don't know how far the market will go, but I'll see as I am going down with the time frames based on what they did as the market was going up. Okay? So now let's move to 3 months chart. Now you see at your horizontal line like this here, the market continues to the upside to reach that trend line. It comes back down to this breaker structure. The next thing, they continue to the upside. Can you see that? Why am I doing this here? If you look closer or you check, you can see that on your left hand side, you can see that there was a continuation pattern here. It was tested, and then a new continuation pattern was also created. The market went up. Because of this continuation pattern, the market came back down. Now, what is it we have right now that can cause the market to break this one and go down? If you add your trend line like this, even though my line is not that accurate, that means we need to focus here as we are going down with the time frame. Let me just draw this one. Remember, when you analyze, you don't just jump just because of you want to buy, you want to sell. You prepare of which is what is important in the market, and so what is going to make you profitable in the market, right? Let me remove this one. So from here, we're moving to monthly time frame. We need to check the breakout. This is the breakout, right? This is the breakout. And then let's adjust our trend line. Guys, let me share this again. Someone might be like, okay, the trend line that you identified on 6 months chart, if you go to 3 months or you go to smaller time frame, it shows that the trend line was tested several times. Here's your first time touch, your second time touch on monthly time frame. The third touch, the market went down. Can you see that? It went back up again. They respected the trend line twice. They went all the way down. They higher the chance that they will still respect the same trend line again and come down. Why? Because of on a higher time frame, you just have 2 touches only on a higher time frame. Therefore, they higher the chance that they will come down. So now on monthly time frame, what is it we see here? There's nothing much here right now. This is monthly time frame, and the market is roughly up there. So we will move to weekly time frame. Remember, as you analyze like this, you need to then identify your pattern that you are using or your strategy that you are using in the market. So now let's move to weekly. Remember, the pattern that you're going to take, it will be corresponding with the direction of the market. It will be corresponding with the direction of the market. This is weekly time frame. Look at how simple this was. I still have to adjust the trend line here. I still have to adjust the trend line. Okay, it looks like this now. Here is your first time touch. Here is your second time touch of the trend line. Good. Now, if you look closer, move to your left-hand side. Your left-hand side is this one. You have your resistance there. Can you see that resistance? The resistance that I'm talking about is just up there. If you pay attention to left-hand side wako, here is your resistance. I want to highlight the resistance. Now the market is approaching the same resistance. This is weekly time frame. This is the resistance. Now, there's something that I want you to learn, guys, and learn and learn and learn and learn so that you can understand what are the problems that you might be facing in the market. The market, you can see, let me zoom in where the market is. You can just tell that the market was just consolidating here for a while. This is weekly time frame, you know, it's almost a month. Let's count the candlesticks. 1, 2, 3, 4. A full month, the market is not moving up, it's not moving down on weekly time frame. Up until the last week of the month, the market came back down to test the break of structure. I mentioned that whenever you're trading support and resistance, you also have to highlight this one as a zone. Who's calling? You also have to adjust this one as a zone. Who's calling now? Sorry, guys. Now, if you check here, you can see we highlight this one as a zone. And then my network is a bit slowly here. I don't know what's wrong, but it's fine. So yeah, okay, here we go. You highlight it as a zone. The market went up. It came back down. Go to a line chart. You'll see what I am talking about. Go to a line chart. I don't know why this one is responding very slow. Here we go. Perfect. So here, this is where the resistance is. You can see where the market broke this resistance. There's nothing much here. They went up, they came back down a little bit, they went up, they came back down to test the broken resistance as support. Hence, you can see now they are pushing up. Now, understand this. This is what you call from higher time frame. And then when you move to smaller time frame, you might find different things. But bear in mind, what direction you have to take is the higher time frame, or which direction you have to take is the direction you got from a higher time frame. Now we're moving to daily chart. Let me reset this one again. On daily chart, if you look closer, the market is roughly on a resistance and on a trend line at the same time. Let's verify that. Can you see that? The trend line has several touches though. It's 1, 2, 3. The third trend line pushed the market down on daily time frame. Can you see that? And then the market went down. It came back up again. And the reason for the market to change the direction again at your trend line below, to those who don't know how to use trend line, no problem. Let me adjust this one, accurate, perfect. So now the market went all the way up. Where are we right now? On the new, actually it's not even a new, it's just a support that has few touches. This is your first time touch, this is your second time touch. So what we're going to do here, let's remove the above trend line. The reason why I want to remove the above trend line, I want to highlight the base and the week. Why am I not using this one? This is where the market is right now. You cannot use this one. Ne? So now here, this is where most of the time people are finding themselves taking losses. If you have my ebook, I mentioned that when you trade support and resistance, always pay attention to the touches. How many touches we got here is 2 touches. What else are we expecting here? We're expecting the market to break this level. And if the market is not going to break this level and go up, the market will come down. We are not going to get in and sell here. Why? They're higher the chance that they will break and go up. Therefore, we don't take that risk. We do not take that risk. And remember, in case this one is going to hold, remember the direction of the market from higher time frame. You have your first time touch here of the trend line and the second time touch of the trend line here. What is it that you might expect? If the market's going to come down here, expect the market to hold on this trend line, and then it will change the direction and go up. Now, here's the trick. On daily, on weekly time frame, this is where your major resistance is. You know that when I say your major resistance, I'm talking about this particular time frame. This is your minor support and resistance if you go to higher time frame. But on this daily chart, this is the major one. Because it comes far from your left-hand side. It was left a long time ago. It has the potential to reverse the market. So now expect the market to break and go up, or the market might come down. Now, what you need to do here is to wait. Just wait like an idiot. Just wait and do nothing. Don't try to be smart here. The market will show you, or the market will humble you if you try to be smart there. Let me show you more. You can see how many touches we got on this resistant. Let's count. Resistant, resistant, resistant. This is the main reason why I count it as a zone. No? This is the body of the candlesticks, and then this is the week. So I cover the whole thing. If you're going to sell, that means your stop loss is going to be above, right? But now look at what they did. They penetrated this resistance on your left-hand side. The resistance was penetrated. That's a signal to us that if they will hold and go down, when they come back, they'll just break. Can you see that? All right. Now, here's the danger. You step in, you sell here, the market goes up. So you step in, you sell, the market goes up, right? The market goes up. You wait for the market to come down to roughly this level. Now you know that the market is pushing to the downside. Okay, this trend line, we don't have the dead touch here. Now let me verify. We do have the dead touch. Let's verify from that left and then all the way up. That's your perfect trend line. Good. Now, if you look closer, let's go to roughly, we are on 4-hour chart. Okay, let's go to 3-hour chart just to look at what is actually happening there. We don't know whether the market is trying to create a double top or what. But now, don't just jump in there. In case the market comes down, they'll leave continuation patterns along the way. Take that continuation pattern and know that you have your resistance here. This resistance was not tested as support. Mark it as a zone again if you want to. The reason why I keep on saying mark this one as a zone, it is because of people expect the market to turn accurately on the tip of the week, and that's not going to happen. So here, bear in mind, if the market comes down, this might be your exit. If they break further, you know that now you're going to exit on that trend line. The trend line we had below. It looks like this. Let's add the trend line. Guys, I will repeat this one. I'll make another example of what I'm talking about here. Avoid to just jump in on a moving trend. If the market will continue to the downside after this broken resistance, expect the market to hold on this one. Expect the market to hold on this one. Remember, the direction of the market is uptrend. Let me make that example so that you guys can understand why I keep on saying the more touches or you get on the support, the weaker the level based on what you see here. The market is currently on that resistance. Hence, I said, don't just jump in here. Just wait for the market to continue, move to the upside, or wait for the market to show that it is moving down, and then take trades that are corresponding with the direction of the market here going down, because of the market will be respecting this one. It will come down to this level. That's where you're going to get in. Now, bear in mind that this is 3 months, 3-hour chart. No? This is 3-hour chart. How long are we going to wait for the market to come down? 3, 6, 9, 12, blah, 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 blah. You'll be doing nothing, just observing. Market. Be profitable. People want to find themselves trading. What are you trading? Just wait for the market to come to you. For an example, look at this trend line. We are on 3-hour chart. They left the trend line here on the second time touch. That was your confirmation that we're supposed to buy when the market comes to this one. Look at how the market moved on the upside. Very, very nice. We don't know why the market turned here, but I assume there might be a continuation pattern if you go to smaller time frame. Here is your support. It was broken and it was never tested as support. Why? Because of the market, it is moving to the upside. Always remember, this is the main reason why I keep on saying, if the market is moving to the upside, look for buy opportunities to avoid things like this. You see that the market just pushed all the way up. Here is your continuation pattern. It was not respected. But as the market was going down, they left a continuation pattern up there. They push the market all the way up to that continuation pattern. The next thing, the market continues to the downside. This is the whole trick. When the market is moving to the upside, look for buy opportunities. When the market is moving to the downside, look for what? Sell opportunities. And then if you have that experience in the market, you can get in while the market is doing a pullback and exit and add orders and push the market up again. You can do that if you have that experience in the market. But if you don't have that experience in the market, I'd advise you to wait. I will advise you to wait for the market to come to you. Remember, we do not create opportunities, guys. We do not create opportunities. You create opportunities, you'll blow your account. You create opportunities in the market, you'll keep on losing. And you won't even understand why you keep on losing. You'll be like, the market is not working. You do this, the market's behaving like this. You do this, the market is behaving like this. Why? It is because of you want to find yourself trading. What are you trading? Because of there's no opportunity right now. $1 million question. This is 3-hour chart. I'll remove everything. I'll remove everything on my screen. Let's erase everything. I don't know what's wrong with my laptop. Oh, okay, now keep the trend line sharp. Good. Now you open your chart, you notice the market is pushing to the upside. This is a 3-hour chart. You'll be like, oh, flip, here is your resistance. The market is pushing to the downside. The market was hunting stop loss, blah, blah, blah. And then what do? You start selling. The $1 million question is, do you trade trend lines? If no, why are you selling here? Why are you selling there if you are not trading trend lines? You don't know. But you look at this trend, you'll be like, oh, flip, it's a huge uptrend. It's a buy. What are you buying? What are you selling as well? Understand one thing. If you're out there, you trade trend lines, focus on trend lines only when you open your chart. You're out there, you trade continuation patterns in the market, focus on continuation patterns in the market. You're out there trading support and resistance, focus on support and resistance. You're out there trading supply and demand, focus on supply and demand. You're out there trading what you call this? You're out there trading head and shoulder, focus on head and shoulder. If you open your chart like this, there's no head and shoulder. Don't bother yourself to buy, don't bother yourself to sell. Only if you want to become profitable in the market. But if you don't want to become profitable in the market, you can look at the trend and be happy and be like, oh, it's a perfect sell. You step in, you sell. The market reverses, it goes up. You take a loss, you start assuming that the market is going up. Now, what you're going to do, you'll start revenging the market without analyzing carefully. You get in here, you sell, the market goes up, you assume it's an uptrend, you start buying. You buy, here's your breaker structure, even though that my line's not straight, the market reverses to the downside. You assume it's a sell, you start buying again, the market goes up higher than this one. You'll be like, oh, flip, now the market is moving to the upside. Now it's moving, you start buying again. You blow your account just like that. What were you doing? You were creating opportunities that are not there in the market. For an example, if you know what you are trading in the market, you're not going to get in anywhere and buy or sell. Let me just ask a simple question. A simple question. I'm not sure if this question will accommodate everyone, but let's talk about driving. Why do you have to observe before you change your lanes? You need to check your mirrors before you change your lane. You need to use your indicators before you change your lane again. If you just change your lane without indicating, you might cause accidents at some point. Or if you just change lanes without checking your mirrors, you might be involved in a car accident. Now, for you to avoid things like that, you have to check your mirrors, indicate in advance to signal to other drivers that you want to move to the right-hand side or to the left-hand side. Same thing here. Take your time, observe, ask yourself, what is it that you have here that can cause the market not to respect your trend line? And if I'm going to get in here, where am I going to place my stop loss? If I get in here, where am I going to exit? You prepare for your entries. You don't just jump in and buy and sell just because of your feelings are telling you to sell. We don't trade based on feelings here. Because if you trade based on feelings, you will lose until you learn to remove your feelings in the market. You don't trade based on feelings, guys. We trade based on what is presented to our chart. Angithi siyalibona chart lethu, it's very much big. You trade based on what is presented to you here. If there's nothing presented to you here, don't trade. Don't take that trade. Don't bother yourself to buy or sell. It doesn't matter what you'll be trading in the market. Whether you'll be trading gold, whether you'll be trading Nasdaq, do the same thing. Understand the pattern that you are trading. Understand the strategy that you are trading and focus on that strategy. Forget about creating opportunities. As long as you are still creating opportunities in the market, you'll never be profitable. And your wish, your goal is to become profitable in the market, but you don't stop the same thing that you are doing wrong. Anyway, let me cut this one here, or let's just keep on going up until we reach 1 hour chart to see what is actually happening here. Let's move to 2 hours. Nami ngikhuluma kakhulu guys, ne? Let me know ukuthi uyibukele ukuphi. Where are you from while watching this video? I just want to see people that are interested in what I am doing here and just to see where you guys are from. Now, if you check here, you had a resistance there. It was broken. Can you see that? The market pushed up, it came back down. You see there's a trend line on 1 hour chart. I'm on 2 hour chart, but I can spot that trend line. Hence, I said this resistance that I identified, you mustn't get in there and buy just because of you feel like it's a buy. Do you get the point? The more touches you have on the resistance is losing the potential to hold. Let's move. Let me add the trend line so that you can see the trend line. Guys, once you have the experience in the market, it'll be easy for you to identify the smaller things. Now, let's move to 1 hour. If it is not appearing nicely on 1 hour, definitely on 30 minutes part. Here is the trend line of yours on this time frame. Now, look at this again. You had your trend line as well. It looked like this. What happened? This is 1 hour chart. They've broken above this trend line. What does that mean to you? We are pushing the market to the upside. Avoid to jump in on a moving trend, or avoid to jump in on a trend on the what they call this thing, on a resistance or on a support that has more than 2 touches. The more touches you have on the support, the weaker the level. The more you have touches on the resistance, the weaker the level. I'm not sure if we are moving together, guys, but if you're not moving together, yes. If you do have my ebook, please let me know in the comment section if the ebook helped you a lot. If the ebook is not helping you, or if the ebook did not help you, let me know so that I can see what I can do with the ebook. If I have to change few things, let me know so that I can do so.